options. If Bank Nifty trading 30,000 in spot, then buying 30,000 strike option, that is known as at the money, buying at the same. You can buy at the money, but Wednesday, Thursday, sell out of the money. Okay, if you think that market is Wednesday market, you think that looking bearish, then sell out of the money. If Bank Nifty trading at 30,000, then sell 30,100 or 30,200 strike. If you are thinking the market will go down, if you think that market will go up, then sell put option 29,900 or 29,800. For selling option, always remember out of the money. Okay, out of the money, not that 4-5 strikes away, out of the money 1 or 2 strikes away, so that you'll get theta benefit, theta time decay benefit near to expiry. And your next question is how to put stop loss when buying or selling options. Stop loss, yeah, there are two types. One is you have to watch spot price. Okay, so this is the method which I discussed. ATM method. ATM method will tell you ATR method. ATR method will tell you volatility. When you take a trade, suppose in the money trade or at the money trade you are taking, okay, Nifty is here 11,820. Suppose you are taking 11,800 call option, thinking that market will go up, then what you should do, look for the ATR. What is the ATR is saying? If ATR is saying 8, then divided by 2, that is 4. Okay, if you are buying a call option, maybe call option is trading at 10 rupees Nifty, then your stop loss should be 6. Okay, so this is the one method you can use on the basis on ATR. How much ATR? If ATR is trading 10, then your stop loss should be 5. But still, stop loss should be always based on the, ATR method will only tell you how much stop loss you should keep. But stop loss, that's what option only trick is. You have to keep stop loss based on the option, based on the spot price, not on the futures or option price. Okay. For example, once you've taken the short trade, then either go with the half position and next half go with here once on the retracement, and once it is done, then keep your stop loss above the pivot. So that is the one of the stop loss method. Another stop loss method is if you are buying above the previous day high, keep your stop loss below the previous day low. That already I discussed. And another is keeping stop loss on either side of CPR. And if you are taking a trend following method, then taking the trade near the retracement to 20 MA and keeping stop loss below the 20 MA. Harsha is asking, do you look at option chain data and can you explain about premium, like when will premium will be high? No, I don't look at option chain data, so I have I don't watch it. I only watch options, charts. That's it. I don't watch for option interest or open chain analysis, option chain analysis and all this. Srinivas is asking, other than option and future, is there any other way to trade in Nifty and Bank Nifty? No, Srinivas, there are only options. You trade in futures or options in Nifty and Bank Nifty. You can't trade in cash like stocks. Okay, so if anybody wants to learn how to do data like option chain, open interest analysis and all this, that will only maybe add you additional advantage to take your directional trades. But I'm not expert in option chain and all this. And I feel that having a chart is enough where it will tell you everything. Okay, so now what we'll do, I show you some chart. What you have to do, just put it in the chart section, which pattern you can see on the chart. Okay, So here I'm showing you one pattern. Only see it on the right side of the chart, not on the left side. Okay, only right side. Focus on the right side and tell me which pattern you can see on 6th of May. So just put it in the chart section. Okay, so most of you are correct. It was a correct guess. That pattern here is Virgin CPR reversal, right? This is the Virgin CPR of previous day. Market opened below the Virgin CPR and started going up. Where is the this one gap? If market has to fill the gap, here is the gap, right? This is the gap of previous day. Market went to fill the gap but could not fill it because there is a Virgin CPR in this range, and market reversed from there, right? So you can start shorting here once market approach previous day Virgin CPR and take the trades at the next pivot. So right guess, whoever said Virgin CPR is the right, not really gap down rejection, because gap down rejection, gap has to be filled. This was the gap but did not fill it. Okay, so this was the gap, but before the gap there was a Virgin CPR. So this is a Virgin CPR reversal trade. Here there are two patterns. Excellent. Most of the people are right. I really admire this batch. Most of you are grasping patterns too early. That's good. One is open drive, right? First candle, green candle, pin bar, close above the previous day high. There is a pivot also above it, very high probability trade. Next pivot is too far. So good place to market to move. Take your profit here. Then what happened? Price reversed from the bullish structure. It started become bearish. Then again bounce happened, and when price came to the same place where trapped traders were trapped, then you should have gone short here. There is no place to keep exact stop loss. Then keep 50 points stop loss on your spot price, and then price reversed again. Okay, so excellent. These are the two patterns in this trade, and here there are actually one pattern, but it looks like two patterns. So which pattern you can see here? Okay, somebody said it is a red kind of breakup. It's not a red kind of breakup, it's a red kind of breakout. Okay, so it looks like a CPR breakout also. Both are correct. People who said CPR breakout also correct, red candle breakout also correct. First candle, big red candle, then no follow up after that. No red candle retracement also, but finally at around 2 o'clock, this candle, one big red candle came and took all the stop losses, and one stop loss hits, one sided move almost till here. Even though there are weekly pivot, daily pivot, it broke everything and went like that. Okay, so only one pattern here. Okay, here also there are two patterns. Okay, so there are two patterns here. First is open drive, green candle opening above previous day range, bullish candle taking support near the weekly pivot, near the daily pivot. So you can go long here, keep stop loss below the candle and take your profit near the monthly pivot or daily pivot. Then somebody said M pattern, though it looks little bit like M pattern, but not very convincingly, because for the proper M pattern I prefer price to really crack like this, then go up like this. But here price came near 20 EMA and again bounced. Okay, so I don't consider it's really a M pattern, but many people said open drive rejection, few people said green candle breakout, and both are correct, but I would say this is a green candle breakout more than open drive rejection, because open drive rejection normally happens at the opening. Candle opens, second, third, fourth candle breaks the first candle low, but here it broke at the afternoon 12 o'clock. So I consider it as a green candle breakout, because people who went long here seeing the bullish pattern, it's kept on going like this. People started buying, keeping stop loss below the day slow, and when day slows was taken, there was a one-sided big move in no time. Okay, so see on your left, you think this is a PPT trade, pivot pressure trade? Not really, it's not a pivot pressure trade, because the first green candle still closed below the CPR, right? So it's not a CPR trade, though fourth or fifth candle broke from the CPR and then started going up. But still, I will not take this trade because it's not as per the system. But if you taken CPR breakout trade, you would have made money because breakout was successful and you could have taken profit near the uh, next pivot. But I'm not very big fan of taking CPR breakout at the morning. I like to take CPR breakout in the afternoon like this. But still, sometime, even though it may not look very good pattern, still it can work out because it's a really CPR breakout pattern, though it's not in the afternoon. Okay, here also there are two patterns. Ashok, I don't have any knowledge on algo trading or can't trading or something like. I don't have all this knowledge. Okay, so I'm sorry. You can read some book on algo reading if you want to master algo reading and all. Yes, most of you are right. First trade was red candle retracement here. This is the red candle retracement, and you should short here. Stop loss above the CPR, and your take profit can be near the previous swing low somewhere here. Okay, here you can take the profit. Then what happened? Price on a small range. And see, one thing you should notice, whenever red candle breakout, how you get the signal, it takes some like when you want to run somewhere, you take the position right before running, like you'll take two steps back and then you start for running race and all this. Same thing I've seen, whenever red candle breakout, before breakout it takes some strength, it makes one candle, two candle, and then it goes. Okay, you can see here red candle retracement first, then first candle green candle, but it's still below the red candle, so not an entry candle. This is your entry candle. This candle took the stop loss here. Same time it closed above the CPR, but more than CPR, this is the more than CPR. It is very convincing red candle breakout. Go long immediately. Keep stop loss below the candle, and somehow it reversed little bit from here, but again took a bounce and then started going up. Okay, see on your left, can you see another CPR breakout? This is my favorite. I like this kind of breakout where 1, 2, 3, 4 small candle and then this candle broke out from the CPR. Okay, I think this is the last pattern we have. So here also there is only one pattern, but there is another trade also. Okay, so yeah, blue line is 20 MA, right? Okay, so most of you are right. So as you rightly mentioned, this is the open drive. Okay, but thing is that candle close is just at the pivot. So you will not take long trade here on the first candle. You will wait after third or fourth candle. Once candle closes above the pivot, then you can go long and keep book your profit at the next pivot. And there is one more entry level near the 20 MA. First time it comes near the 20 MA, you can start adding the position or enter it if you miss this in the opening of the trade. But remember, as I said earlier, if near 20 MA, if there was some pivot here like this, then it would have been very high probability trade. I would have entered here with full of confidence, thinking that there is a 20 MA retracement plus there is a pivot. But thing is, there is no pivot, only 20 MA, because next pivot is here only. So though it worked, but it is like not very high probability trade, unlike having the pivot along with the 20 EMA. Okay, so but still it would have worked and gave you good profit. Another one, you can see that this candle took support near the weekly pivot, and these two lines what you see, this is the previous supply zone, okay, on daily time frame, and this candle closed above all this, it bypassed all the supply zone. Had this green candle closed here, had this first green candle closed here, you should not take the long trade, okay, because there is a supply zone, there is a weekly pivot, but this candle bypassed supply zone. Whenever you see next day there is a supply zone, okay, or something like red candle high of the previous day something, but next day you see big gap up, and gap up will bypass all these lines. That day you can see that big move can happen like this. Why? Because it bypassed all the resistance and closed above it. But same time this candle was closed somewhere here, then it's not a good trade to take until this entire three levels taken out, and good place to short it instead of going long, but this is a good place to go long. Okay, so that's it, guys. Good, and really I appreciate that most of you are very like almost correct answer you gave on the patterns. So that clearly shows that you have like understood all the patterns. So I'll tell you one thing. After this webinar, send me email if you are really very passionate about chart reading and all this. I have last 1 year charts saved on my computer. Okay, so along 400, 500 charts, both Nifty and Bank Nifty together. After the webinar, earlier I used to send it to all participants whoever attended the webinar, but after that I realized many people don't even open that folder. Just they will, I mean, they will just ask it and they will not even show interest. So that's why I decided I'll send my last 1 year charts, Nifty Bank Nifty, only for people who are interested. So send me email requesting for the last 1 year chart, and I'll send you through Google Drive. So that itself can give you a lot of edge in chart reading, because you can identify day by day Nifty Bank Nifty, like I've given day by day folder, Nifty Bank Nifty side by side, and try to understand price action. Try to understand every day which are the patterns happened, and that will make you learn price action very quickly. Okay, send me email, no problem. Not now, after the webinar. Jyoti is asking 20 MA plotted on 5 minutes chart based on daily price. No, this all 5 minutes time frame, 20 MA. Okay, and this is red line. What you see is supply zone. So this was actually strong resistance zone. There were two strong supply zones. There's a weekly pivot. Okay, if price came like this, then it was a good place to sell. But what happened? It bypassed all this resistance and closed very bullish candle. Here also this 20 MA, 200 MA, all are 5 minutes, not the daily. Okay, guys, so we are almost running late. We have only 20 minutes left and we have to finish 2 more sessions. Next, we are coming to risk management and position sizing. And remember, we are done with all the chart reading skills, analyzing charts, everything. It's going to be theory now for next 30-40 minutes, or maximum another 30 minutes. I'll try to finish. And you can read the slides and you can understand. Okay, so it is not like chart reading where practically I have to explain, but I'll give you main bullet points of importance of risk management. Remember, it's a small 30 minutes this one, but very, very important. If you ask me if I made my losses in day trading when I was new, because of risk management, not because of strategies. If you ask yourself why you have lost money in your trading, because of risk management, because you don't know what is position sizing, you didn't know about risk reward and all this. Okay, so please focus your, please have your attention for this session. Importance of risk reward in every trade. One of the most famous book ever written in trading. I don't know how many of you have read this book, Market Wizards, written by Jack Schwazer. Okay, he's an American trader. This book contains interviews of the top traders of the world. The topmost traders have given their interviews in this book. And when you finish this book, one thing you will understand, every trader has different strategies. There is no magic strategy or magic indicators. Every 20 trader or some 25 traders interview he has taken, every trader will give their strategy. They will say what is actually my strategy, whether I use indicator, whether I use some data, or they will tell it openly. But the reason why they are successful, because of good understanding of risk management and discipline in trading. That is why they are successful, not because they have some magic strategy or magic indicator. Okay, remember this, trading is not only about strategy. You need good strategy, but you need to have good risk management and discipline in trading. What is a discipline in trading? Having some rules, and that rules I'll discuss in next slides. And what is discipline? Discipline is like I gave you yesterday's example. Indian stock market, Nifty, Bank Nifty went by some 5-6% up. And if you are disciplined, you would have let it go because it's not as per your system. You don't trade on events day, and you'll shut the system. That is your discipline, following your system. But indisciplined person will start getting greedy. He thinks that market is keep going up. I am missing this move. I lost the opportunity to make move, and he'll start buying at the wrong place. So that is what all about discipline, following your system. Okay. Risk management as equally important as winning strategies. So and along with winning strategies, have a good risk management also. You should have good risk management. So my high recommendation: read this book, and you will gain many good knowledge on risk management and how traders are successful, how they're disciplined in the trading, everything. So this is what I said: risk management is only holy grail when it comes to trading. Remember, when it comes to trading, it's not only about win rate. Okay, when we are starting win rate, we want to take, if we take 10 trades, we want to win all the 10 trades, and even one or two trades goes into stop loss, we become very very sad, right? We become upset. And if we win 2 3 trades goes in our direction, we feel very happy. We think that we have become master in trading. We become that we have learned trading, and now we are winning every trade. But remember, trading is not about the win rate. Trading is all about risk reward. This is important. Not how much percent you win. You can win even 50%, 40%, 30% of the time, still you can be a profitable trader. That means if you take 10 trades, out of 10, 5 trades only you win, 5 trades you lose, still you can be a profitable. You take 10 trades, you win only 4 times, 6 times you lose, still you can be a profitable. As much as 3 times only you win, out of 10 trades, 3 times you win, 7 times you lose, still you can be a profitable trader. For that, you need to have good risk reward. That means if you trade with 1 to 3, that means your risk is only 1% and reward is 3%. That means whenever you lose only 1% of your capital, and when you win 3 times of your lose, then you can be winner by even the 30% win rate. So don't worry about win rate, focus on risk reward. If you ask me, at least focus on this. Try to have 1 to 2 risk reward in your trade, and try to win only 50% of the time, if not more than that. Okay. If you ask me personally, my win rate is more than this. So I don't wait many times for 1 raised to 2 also. Sometimes 1.5 also I take the profit because win rate is up. So if your win rate goes up, then okay, slowly you can reduce the risk reward. When you are new, look for this. Many traders lose in trading because of lack of understanding of risk management, and position sizing is part of risk management. One should know how many lots or shares one should take for each trade. That is important. Okay, you should know position sizing before taking any trades. What is position sizing? Position sizing is knowing how many shares or lots you have to buy before taking a trade. Trading is not that today you will take 5 lots bank nifty, tomorrow 10, day after tomorrow you will take another 8 lots. It doesn't depends on how much money you have in your account, how much broker will allow you to take the lot. It is not like that. There is a formula to calculate position sizing. For that, first you have to calculate your total trading capital. First decide what's your trading capital. It's 1 lakh, 2 lakh, 5 lakhs, whatever. Then determine your risk per trade. Okay, your risk per trade should be always 1 raised to 2. That means if your capital is 2 lakh, you enter day trading with your capital, then whenever you lose, it should be only 1%, because stop loss is in your hand, right? Profit is not in your hand. Market will decide, market will give the profit, but stop loss you can control. That is the only thing in your hand. So whenever your loss is 1%, that means 2 lakh, 1% of the capital is 2000 rupees. If you are going in the loss of 2000 rupees, you should immediately cut the trade and close the trade. Not that you keep averaging or keep letting the profit go like that, thinking that market will bounce, so at least I'll exit at break even. That is how finally you'll blow up your account and you'll be out of stock market. Okay, risk is maximum, you'll lose if your stop loss hits. If your capital is 5 lakh, risk per trade 1%, that is 5000 rupees, and maximum loss should be 5000 if your stop loss hits. It should be 5000 in every trade. Okay, it should not be like one trade you'll lose 5000, another trade 10,000, another trade 8000. That is not the how you have to manage your risk. If you have decided your capital risk per trade, then your risk loss should never be more than 5,000 rupees. So this is the formula this is the formula, okay? So you can write it down after I send you the webinar, put it in the Excel file and take this formula before taking any trade. That is percentage of risk per trade into your capital divided by risk per trade. That is nothing but stop loss. Suppose Bank Nifty trading at 30,200, you decided to go long and to buy calls at premium trading at 200 rupees. Now you have entered that trade at 200. You have decided your stop loss at 25 points. So your stop loss is 175. You decided your target is 50 points. That means whenever 200 rupees goes to 250, you will book your profit. That is what you decided. 1:2 risk reward. Then this is what your formula. 1%, that is your risk per trade. You said your capital is 5 lakhs. Your stop loss is 25. What is 1% of 5 lakh? 5,000 rupees. What is the stop loss you decided? 25 points. What is 5,000 by 25? 200. 200 units you have to buy Bank Nifty. I'm giving Bank Nifty example is. How many units in a Bank Nifty? 20 units. So you have to trade with 10 lots of Bank Nifty. That is how we will come to the conclusion based on your stop loss. How much lots you will buy. Because even if your stop loss hits, your loss will be only 5,000 rupees. So you are still with your risk. So you can stay in this trading game and you can survive. That is how you have to do the position sizing. Okay, for this is for Bank Nifty. Same applies for stock. Then you have to buy 200 shares. Okay, so if price of the share at 200, then you have to buy 200 units. If your stop loss is 25. Okay, please go through the slides once I send it. If you are not understanding, because I'm going little bit slow, little bit fast, because we are running short of time. 5 rules of risk management. Okay, these are the really very important. When I was a new trader, I strictly followed this trade. That is what helped me to stay in this trading business, even though I was not profitable initially, but slowly I became profitable because I followed this all 5 rules. So my advice is take a printout and post it near your trading desk and follow this rule. First is 1% rule. That means you will never risk more than your capital in each trade. 1% rule. That means if your capital is 2 lakh rupees, your risk is 1%. That means whenever you lose only 1%. That is only 2,000 rupees in every trade. Depends on your capital. That is 1% rule. Have a stop loss in each and every trade. Many people say that stop loss hunting takes place. Broker purposefully takes your stop loss. But my experience, broker is not interested in your stop loss. No one is interested in your stop loss for trader who's trading with 2 lots, 4 lots, 5 lots. Okay. So no one is interested in your stop. Your stop loss gets hit because you keep it the wrong place. Now I shown you if you keep it above the pivot, below the pivot, then most of the time price goes till there and reverses, so your stop loss safe. If you keep below previous day high, above previous day low, it is safe. If you keep other side of CPR, then it is safe trade where stop loss getting hit is less chances, not every time but less chances. So you should have a stop loss in each and every trade and should be in the system. Many people say mental stop loss. Never go for mental stop loss, always keep it in the system. Okay, have a strict reward ratio of around 1:2 per trade. That is what my recommendation is. Have at least 1:2. If you can't maintain 1:2, but at least have 1.5 risk reward. Your winning trade should always and always should be more. If you are losing 2,000 rupees in a trade, but when you are right, when you trade, you take a long trade and it went up, market went up, then your profit should be not less than 3,000 to 4,000 rupees. That means when you see your trades in trading journal, your loss should be always small, win should be always big. That is the only way to stay profitable in trading. Not trying to win 10 trades out of 10, all the 10 trades you want to win because you have a strategy. Don't go after that win rate. Follow on the focus on the risk reward. Never average to your losing position. What that mean? That mean I said red candle retracement pattern. You will take the trade when price comes to the high of this candle and you will short here, right? And you'll book the profit once it is in the good risk reward and you'll keep the stop loss here. But what happens? Sometimes it may not go down, it can come and hit your stop loss and your stop loss gone. As a disciplined trader, you should take your stop loss and exit the trade. But many traders, what they do, they'll not take the stop loss here. They will again start averaging. They'll start shorting market as it goes up. They'll start shorting it thinking that market will reverse. But sometime like yesterday, market may not come down only. It can keep going up and you will end up with a big, huge loss by averaging your losing position. So never ever average the losing position. But there is one more method which I do it. Okay, for example, this is the red candle retracement. This is the central pivot range, central pivot. I thought price may not come and hit till the high of the candle because there is a CPR here. So I'll start with the half position, I'll short here and half position I'll keep here. That is not averaging. Okay. Averaging is keep averaging your position as position going against your trend. So I'll take half position here, keep half position here. If price comes here, my position gets filled and immediately my stop loss already set here. Price goes here, I'll book profit. Price goes here, I'll book my loss and I'll exit the trade. But if I keep shorting here, thinking that market will go down, then that's how I finally go and blow up my account. Have a daily limit loss, say maximum 2% of your total capital. That means if your capital is 2 lakh and I said you should risk only 1%, that is 2000 rupees. Assume tomorrow you took first trade and it hit your stop loss. Okay, 2000 rupees gone, your capital 2000 rupees gone. Then afternoon you see another pattern, you took another trade. Unfortunately, that also hit your stop loss. Another 2000 rupees gone. So 2% you lost, right? In a single day of your 2 lakh. So that means from 2 lakh, 4000 rupees gone. What is most of the traders do? They get very angry, they get very upset that already 2% gone. Now I should not leave. I should cover my entire 2% before market close. Now they start taking big position, start taking revenge trading, start taking wrong trades to cover up their loss. And finally, initially they were losing only 4000 rupees if they have followed the system, follow the rule, and by the end of 3:30 they will see that they lost 15,000 rupees. That can happen, and that happened with me also, and it would have happened with you also if you had experience. Because to cover 4000 rupees, you ended with 15,000. That's why it's important that have a daily limit loss, say maximum 2% of your capital. That means on your first trade gone loss, you lost 2000 rupees. Another trade you took that also hit stop loss, 4000 gone. Close your system, close your computer, don't even look at the system, exit the trade, don't trade for that day, come back next day. That is what discipline, that is what following the rule, that's what I do it. If two trades hit my stop loss, I'll close my system, I'll not even look at the chart, because the more you look at the chart, more you get tempted to take another trade to cover up your loss. Okay, so have daily limit loss, because small losses easy to forget. If you lost 1% of your capital, next day when you come and sit in front of your trading system, you already forgotten that yesterday you made loss, and next day is fresh day for you. You can take a fresh trade with the fresh mind. But previous day you made 20,000 loss. Okay, your capital is 2 lakh, 10% you're gone because of your revenge trading. Then it really affects you for next trade. Another 2 3 months you will not forget your loss. Okay, remember, just recall yourself. If you are in the trading business for last 1 year, how many times you remember your 1000 2000 loss? You already forgotten, right? You don't even remember. But do you forget your 20,000 50,000 loss in a single trade? You still remember exact date, which stock it gave you loss. Okay, which trade you took, everything you remember, right? That's why have a daily limit loss, have a fixed stop loss. If it hits, exit it, but by next day when you come, you are fresh, you have already forgotten. Okay, trading journal, this one I already told you, this is self-explanatory. I'll send you Excel format along with this presentation after the webinar. Start following this trading journal, it's really very helpful to know how you are performing as a trader, and you will see whether you are following the rule, how much your risk reward, when you win, how much you win, when you lose, how much you lose. Everything you see in a single Excel file. Okay, don't neglect or don't ignore. If you want to become a serious trader, this is important. Trading journal is which differentiate professional trader from amateurs. Okay, so I'll send it, and you will. It's very simple pattern, simple format. You will understand. If you don't understand, let me know and I'll help you out. Okay. So guys, any questions before we go to the last session? Kishore, again we can't go to options. Yeah, you send me. You contact me after the webinar, and I'll help you with that. Okay. Same thing to welcome. I don't know who is welcome. Please contact after the webinar. Otherwise, others will get delayed because of us. Okay, for both Kishore and other person, contact me for any questions we have on the options. Okay, because already we are at 6:30 and we have to finish last session. Okay, last session about the trading psychology. Okay, trading psychology. What is trading psychology? Trading psychology. All these days, we always used to think that successful trading is only about the strategy. We thought that if you have good strategy, then no one in the world can make you losing trader, and you will become richest person because you have a secret strategy. But that is not right. What you need, first of all, you should have a proper mindset. Trading psychology is 50% of your successful trading. If you want to become successful trader, then you should focus on first trading psychology. 30% of your success depends on risk management, and last 20% only on strategies. Okay, it's not 100% strategy, guys. Please remember it. Strategy will give you only edge, but if you are lacking trading psychology, lacking risk management, no strategy can save you from losses. Okay, successful trading comprises that's discussed. Successful traders are not successful because of some secret strategy or secret indicator, but because of right mindset. Have this first, right mindset. Many new traders consistently search for holy grail strategy that can winning trades all the time, but does it exist? No. That's what new traders, even I was like that, going for holy grail, thinking that which strategy can give me profit in every trade, which moving average, which MACD, which settings, shall I do this RSI, shall I go for this RSI, which can give me, nothing will work. Okay, there is no holy grail, no holy grail exists. So don't keep running after strategy which can give you 100% win rate. Nothing can give you 100% win rate. The secret of successful trading does not lie in amazing strategy or indicator. The secret lies between two ears. That is your trader's mind. That is in your mind. If you control your emotion, you will be successful traders very quick. So these are the powerful ways, some of the very strict discipline how you have to follow to become a successful. Have a strict discipline. Trade according to entry exit rule, never on your emotions. Okay, what is that? That means, again I'll give you yesterday's example. I said for events day I don't have any system, so if market moves based on news, I'll not trade. Even though it looks like market going up, I can make money. So that is following on your entry exit rules on your trading based on system, never on your emotion. Emotion says that, oh, it looks bullish, go buy it, you can make money. That is based on emotion. Don't trade on emotions. Okay, trade on what your system says. Focus on following the rules, not outcome of the trade. That means follow the rule. When you take the trade, don't be have strong bias that this trade has to work because last time it worked. Nothing like that. Any trade can fail. Okay, so for that you have to follow the rules. Avoid revenge trading. You know what is revenge trading? I explained. Keep trading until you cover up your earlier losses. FOMO stands for fear of missing out. Getting scared that if you don't take the trade, you'll miss the opportunity. Okay, you should remember, if you miss the one opportunity, another one will come. There are 240 trading days in a year. If you miss today, there are another 239 days in next 1 year. Okay, remind you like that. Don't take wrong trades out of fear of missing out. Don't do over trading. Have strict rule of 2 to 3 trades per day. Wait for good patterns and trade those patterns. Think logically. Trading is a probability game. Any strategy can have a losing streak or a winning streak. Okay. Suddenly, 4 5 trades can go wrong with any strategy. Don't get disheartened. Don't feel low confidence. Don't start cursing your strategy, thinking that it's not working. I should stop this strategy and learn something new. Then you will only remain learner for throughout your trading career. You will not never become master. So remember, any strategy can have 4 5 winning streak or losing streak. This is all part of your trading. Have discipline to stick to your strategy throughout the wins and losses. Okay, 3 4 trades went into loss. That doesn't mean that strategy bad. You should stop it. Remember, any strategy required 100 trades to check whether that strategy works or not. That's what research says. So take next 100 trades on your strategy, whatever, and then identify whether it's making you profitable or no. How you will know? That's why trading journal is important. Put all your trades, and in the comment section, now I discuss about the patterns. Whenever you take any trades, in the comment section, write down which pattern you have taken and how it traded, whether it went into profit or loss and everything. But have at least 100 trades. If you take 2 trades per day, still just only 2.5 months to take 100 trades, right? So it will not take years. Within 2.5 months, you will know whether that strategy is working for you or no. Have strict discipline to stick to your strategy. And this one I already discussed. You need only 50% win rate to be successful trader. You don't need a system which have 80% accuracy, which have 90% accuracy. I get calls from some participant. What is the accuracy level of your strategy? I say I not checked it. For me, accuracy is not important. For me, even it is 50% also gives, I am fine with it because I trade on risk reward. If I trade on strict risk reward of 2 hour, even 50% win rate can make me profitable trade. Okay. When your average win is more than your average loss, you stay profitable over long run. So finally, have confidence. Have confidence doesn't mean having confidence for big trades, but having confidence in your strategy. So many people think that confidence means if they take 100 lots, 200 lots, they are very confident. Confident is not in that one. Confidence is keeping in confidence in your strategy. Stick to one strategy, master it. Don't jump from one strategy to another. That means now you learn pivot points and price action. So my suggestion is now start reading more on that. Start doing back testing more on that. Try to read whatever possible. Try to back test on stocks, commodities, wherever you see how market moves near the pivot. Learn to write, try to read everything, watch everything about price action. Go to YouTube, try to see whether you can learn something new. That is how one becomes master in anything. Not by trying one thing, next week you will go and jump into market profile, then you'll go and try to learn option chain analysis, then you'll try to learn another strategies, option Greeks. That is not how you'll become master. Stick to one strategy and try to master it. That is how I have done. From last 1 year, other than pivot points and price action, I don't look at anything. Okay, there is something called WAP strategy. There is something called Ishimoku strategy. Okay, there is something called order flow. I don't care about all this because pivot points and price action, I am happy with that, which is giving me good result, and I am trying to master it. That's what you have to do. Important, very very important, do a self analysis on your personality, because whatever you are as a person, that reflects in your trading. You should ask yourself, what is your weakness? Are you an impatient person? Okay. Are you a short tempered person? Are you egoistic? Are you revengeful? If answer yes to any one of them, then work on it, because your personality reflects in your trading. Because if you are an impatient person, you will suffer from FOMO. If you are a short tempered person, you will get into over trading or revenge trading. If you are an egoistic person, you will never accept your losses, stop losses. You will keep fighting with the market to prove that you are right, market is wrong. by nature you are a revengeful person, then you will keep taking revenge on market whenever your goes into loss, to cover up your losses into profit, because you are revengeful. That depends on how you are as a person. In real life you are like this, then same thing applies in trading also. And why I'm saying this, with my own personal experience. Okay, if I look back all my losses during my earlier of career, I had all this problem. I was an impatient person, I was a short tempered, I was egoistic, all this I had in me. And when I changed my personality, then I could see real improvement in trading also. Now I don't get angry, now I don't have revenge if my stop loss hits, because I follow the rules. Wait patiently for right setup. Only trade when there is high probability pattern or setup. Okay. When you are in doubt, do nothing, don't trade. If you think that Nifty showing bullish pattern, but Bank Nifty already at some CPR resistance, so should I take long trade in Nifty or no? Because I said you should watch both the trade, both the Nifty, Bank Nifty. So when you are in doubt, what you should do, do nothing. Don't take the trade, because you'll have another trade. Trade will keep coming. It will not go anywhere. Take only high probability when you see good probability setup or pattern. Remember this, once you become full-time trader doesn't mean you have to be constantly trading entire day, taking 10 to 15 trades. Because any other job, the more hard you work, more you get appreciated, right? Your company will appreciate you, bosses will appreciate you, you'll get promotion because you are working hard. But trading doesn't work like that. You not necessarily you have to take 10 to 15 trades. 2 to 3 trades also per day is good enough. And whenever you don't see pattern, just wait for the pattern. Don't have to rush into trades and keep trading throughout the day. 1 to 2 or 2 to 3 good day trade per enough to stay profitable month after month. So these are the 5 powerful ways how you have to follow it. Okay guys, so we are coming to the last slide. Top reasons behind my day trading success. Already we are 10 minutes late. So if any questions, I'll take it and then we'll go to the last slide and we'll close it. How much it will take to become a good trader as per your experience? Okay, see, I started trading in 2004 and I became successful only in 2017 somewhere, 2017 and early 2018. Though it took me 14 years to become consistently profitable trader. 14 years it took me, right? But that doesn't mean that it will take you 14 years. But I had a full-time job. I was doing as a part-timer. Second thing is that I did not I did not try to learn anything. Chart reading, technical analysis. Okay, I was just trading just like based on my emotion. Okay, that is how I spent 14 years. But once I learned technical analysis, once I learned patterns, once I learned pivot point, once I learned price action, it did not take me more than 6 to 8 months. So my answer is, if you are serious about learning, do backtesting, follow the discipline, follow risk management, then my assumption is 6 months to 1 year should take to be consistently profitable trader. Okay, James is asking, what's your backtesting procedure, market replay, or did you use a program? James, all my backtesting done on manually. Okay, I'm not a technical person where I know coding, algo thing that I can run a program on AMI broker and I can get the result. All these are done by 2 years chart, going to 5 years time frame. Yeah, it takes a lot of time, but there is nothing can replace doing manual backtesting. Okay, so all patterns were tried and tested by manual backtesting. That is why I said I have almost now 1 year backtested charts. I have patterns. Okay. Intraday, I recommend Dinesh. I recommend zero DAR. Though zero DAR nowadays sometimes it can give you problem during the live market and all this. But zero DAR is good customer service, but sometimes it can in between trade it can go like suddenly you may not be able to sell your position. Suddenly the system may stop. But it happened once with me. But it, yeah, that problem is there Zerodha. Otherwise, Zerodha is fine. Okay, pivot trader, for your question, he's asking, observe any quarter which is more profitable compared to other time of the year. See, out of 15 pattern, some patterns are bullish pattern like OD pattern, green candle retracement, all are OD pattern. So you should know what is the overall market structure. Now Indian market last 3-4 months have been very bearish market. So bearish patterns works best. During the bullish market, bullish pattern works best. So you should always look for the what is the higher this one, what is the market structure actually, what is market sentiment. Okay. And your second question is, what is your initial capital after you became profitable? What amount you started with? Okay, when I became full-time trader, my capital was 5 lakh rupees. Okay. So when I became full-time trader, after I quit my job, I traded with 5 lakh capital, and now currently I'm trading with 10 lakh capital, and my risk per capital is 10,000. If I lose any trade, my stop loss hits, then I lose maximum 10,000 per trade. Okay, fine. So any more question, guys? Contact me after the webinar because we have to finish this last slide. Already we are 50 minutes late. Okay. So top reasons here, I'm giving my plan, how I became a successful trader, what are the things I prepared myself. So it will give you an idea if you want to become a full-time trader. I'm not in trading business because of easy money or it's giving me financial freedom, but I have a real passion for trading and I'm very passionate about chart analysis. Okay. So that's why I am into trading. Yeah, it is giving me money. It's giving me financial freedom. Now I don't have to think about going to 9 to 6 jobs in my life. I don't think I'll ever have to go back because now I'm like, man, trading is giving me everything what I wanted. But most importantly, I am in trading because of passion. Okay. I'm very passionate about chart analysis. You could see that 12 o'clock I started my webinar. Now we are 6:45 hours into this webinar, and I'm non-stop talking, discussed so many 70-80 charts because I have passion for that. So I never get bored, or I never get bored of discussing because I'm passionate. So my advice is, come to trading only if if you are passionate about chart analysis or whatever it is. Come to trading only if you have passion, not only because of easy money or fast money. Okay, not depending on my trading profit to run the house. So I'm in no pressure to make profit every day by trading. So before coming to full-time trading, I closed all my loans. I had my car loan, house loan, everything. I closed everything, and I came to full-time trading because I told I was working in Dubai and all this. So I made savings before coming to India so that I can clear all my loans, and I am now not dependent on trading profit only to run the house. That means next month, if I don't make any profit by trading, I still have some savings which can take care of me. So if you want to come to full-time trading, ensure that you close all your loans, clear all your EMI, and have good savings so that if couple of months you don't make profit in trading, still you are in no pressure to make profit every day. It should never be like next month I have to pay my EMI, home loan, I have to pay children's school fee, I have to pay insurance, but I don't have money in savings. So somehow I have to make profit by trading only. That should never be case. Okay. For successful trading, one has to have a calm and cool mind. So that will come only if you have good savings, which can take care of your during drawdown or some weeks or couple of months. You are not getting profit, only you are staying break even. You should not be in pressure or under stress. I trade only two instruments, Nifty and Bank Nifty, day in and day out. That's giving me a great edge and helps me in understanding movement on daily basis. Okay. So I trade only Nifty Bank Nifty. So for last years, 2 years, since I'm trading only Nifty Bank Nifty, now I know the personality and it's giving me edge. So my advice is either stick to only few stocks from high liquidity like Nifty 50 or trade Nifty Bank Nifty. So over the period of time, you will understand their movement or personality, and you'll see improvement in your trading by knowing their personality. I have more than 500 end of the day charts saved in my computer which analyze on regular basis and that help me in mastering chart reading. I have almost 500 charts which I told you earlier, and I keep every weekend I just keep analyzing it so it registers in my mind, and patterns I can memorize those patterns. Okay, as they say, patterns keep repeating, so that it helps me whenever the patterns happens in day trading. I know how to trade those patterns. I have a set strict rules in my trading, like not more than 2 trades per day, and my maximum loss is 2 hour per day. Okay, so that is what I follow with 2 trades per day. Sometimes it goes up to three also, but it never goes more than 3 trades per day. I treat my day trading as a serious business, and I treat my stop loss like cost of doing my business. If I open some restaurant business, if I open some tours and transport business, then remember I used to have a lot of investment, right? I used to buy a, first I had to, for restaurant I had to buy a space where I can run a restaurant. I have to buy furnitures. I have to keep employees, waiters, cooks. I have to pay their salary. Everything is cost, right? If I opened a transport business, I have to hire drivers. I have to keep some vehicles. I have to pay the EMI for those vehicles. I have to pay for the fuel. All these are business in any other business. But in trading, you need only laptop and you need only internet. That's it, right? Brokerage is very small, but there is one cost comes with trading. That cost is stop loss. So treat your stop loss like a business cost of doing business. Okay, whenever your stop loss hits, just remind yourself it's a cost of doing trading business. Don't take it as a loss, so that you can make peace with your stop loss. Finally, I realized to become a better trader, one has to be a better human being. So I worked on my shortcomings. I said what all I had weakness in my personality, and which reflected in my trading work, trading performance. That means from short-tempered person, I became a patient person. Okay, from egoistic person, I decided to become calm and humble, so that I don't take revengeful trading. All this you have to work on your personality, so that while taking trades, you will not do all these mistakes. Okay. Fine, guys. With this, we are almost at the end. So, any question, I'll take it. Shrikant asking, out of curiosity, do you have stock portfolio or mutual funds investment? Shrikant, I have some stock holding positional. I mean, not a short term, long term. Mutual funds I had, but I closed it. But I'm not a good fundamental investor. I don't know anything about fundamental investment, like reading P&L, balance sheet, everything. Okay, so I'm not a good investor. I'm a good trader, I feel. Okay, guys. So after, so yes, somebody asking for next some days. Can you share when patterns are seen active? I'm running a trading this one for 2 months. I'll send it link to everyone by Monday morning, so you can join the trading sorry, Telegram application. And every day after the end of the day, somewhere in the 9:30 10, I upload the Nifty Bank Nifty chart with the patterns explained. But this Telegram will be only for 2 months, so that you can learn it. Okay, fine, guys. So that's it about my 6.5 hours webinar, and I thank you everyone. And before everything, before closing this, I want to thank one of our participant, James from US. It's midnight. He attended training at 2:30 in the midnight, and it's maybe 8:30. Thanks, James, for like staying awake for throughout the seminar, even though it's odd hours, and really appreciate it for joining the webinar. And also, I'm thankful to all the participants for joining this webinar, and please keep in touch. I wish you all the best in your trading career. You'll receive the presentation slides and all patterns. And if you want more charts, send me an email by before I go to the bed. Okay. And thanks once again. Yeah, give me 10 minutes break. People who want to sit for the trading view settings, they can sit for another 10 minutes. I'll freshen up and come back, and I'll open my trading view account and I'll show the settings. But people who have other work, send me a WhatsApp message. I have done a small video also on settings of pivot points and CPR. I can send you that video also on WhatsApp. Okay, it's up to you whether you want to exit or you want to sit for another 10-15 minutes.